Hello, this is Ronen Itzkovich from Skills of the Trade. Today is Sunday, July 28, giving you the weekly stock market analysis for Monday, July 29, that week, as well as stock picks for this week that we can follow. So let's start off with the SPX, the S&P 500 index. We can see that we are still above the latest high, and last week we have continued upwards, and I am estimating that we will continue to go upwards. We did not test for support this last week, so what I'm assuming is that we will continue to see upward trend in the stock market, and we will look for bullish trade positions. Now, what I'd like to go with you is one of my stock picks that I've shown to you last week, which was XLF. Let's go back to that. You may enter it if there is a gap up and place your stop loss below, and your first take profit will be around 28.20. If we now see what is the results of XLF this past week, we can see that, as I've said, we were down at this position last week on the hourly chart, and Monday morning we opened up, Tuesday morning we opened up with a gap up, which is what I was saying, that's our entry for, that's our signal for entry. When we have a gap up and the candle did open up on Tuesday morning, we enter down here. Our first stop loss was at 28.20, which was already reached on the first day, and then you continue for the second stop loss, which was already achieved down at 28.60, around that area. If you're still in this position and you'd like to continue for a third take profit position, I would say that the next or the last take profit position should be around perhaps 28.90. Now, the first stock pick that I have for you for this week is PFE. That's Pfizer Incorporated. When we look down at the daily chart, we can see that we have an upward trend, and in the last several weeks we were coming down for a correction, and here I've drawn the Fibonacci retracement tool from the beginning of this last correction to the end, and now we are reaching towards the end. We have on the daily chart one touchdown, and we are coming back down for a second touchdown. Now, I'm not sure if we will see a second touchdown, because as you can see, we do have another support line down right here, and this might be our false break, and down we have a reversal candlestick, a hammer candlestick right here, as well as a green engulfing candle. So what I would do is I would place a buy stop entry order at 43.30, and if the price does reach that, we will enter our position and place our stop loss just below the last low, which is at 41.90, and our take profit will be at 44.24, our first take profit. Now, if we don't see this week that the price has reached 43.30, there is a chance that it might come down again and go down to the 31.2% Fibonacci for the second time, and then I'm looking to see a reversal candlestick again on this line just like this one right here, the handle candlestick, or perhaps a candle comes down and we'll see a gap up. If there's a candle that gaps up from this after the price has reached this level, then we would also have an entry for a signal for entry. So let's follow that this week. Next one we have EWZ. Now we see that if we look at the daily chart, we are at an upward trend that started from here. Now the price did come down, so that means we will have to start checking for Fibonacci correction from down here. However, we might be able to enter for a short-term trade if we go down to the hourly chart. And we see that we have, let's get rid of this trend line, and we will put support line down here. Now if we go and we check the Fibonacci correction from down here all the way to the top, we see that we have reached a correction of 38.2% Fibonacci, and the price is stagnating on that level, and we see a reversal candlestick down here. Now for us to enter, what I would like to see here is I would like to see that the price goes up and comes down again for the second time, and let us see a reversal candlestick at this level, and then we enter above it. Alternatively, the price will come down, reach the support line, and we'll close above the 38.2 Fibonacci correction level. If it does that, I want to see a gap up before entering, and our first take profit will be at around 46.30, and that probably should be our first or second take profit, because I don't expect this upward trend to continue further up much longer, and that's why I suggest you close your positions already 46.30 at around that level, because as I said, at the long term our real correction is supposed to go further down starting from here. So really I'm expecting for a healthy correction that the price will continue to come down. However, perhaps this week we will see it coming up to that level that, as I said before, 46.30. We can take profit over there and close it before the price will most likely, in my opinion, for it to make a healthy correction, it will need to come down further to around 43.40. Now the last stock pick that I have for you for this week is VER. Looking at the daily chart, we see that we have a correction in the last several weeks. We can see that we have support at this level, and come stretching a Fibonacci correction for all of this upward trend. We can see that we have a first touchdown and a second touchdown on the daily chart when the price is coming up. Now what I'd like to see to enter is I would like to see yet again even a third touchdown, ideally coming down to the 61.8% Fibonacci, just to be on the safe side, because I don't like to enter. I think we all have already missed this entry. It's a little bit too far for a safe ratio of risk to reward position, so I would not enter right now. If I do see, however, that the price continues to go down for a third leg, with the third touchdown, and we see the reversal candlestick or even an up gap, that will be a signal for our entry. As you can see also here, we have somewhat of bullish MACD divergence. It's not a complete divergence because the price did not go above the zero line. However, it does give us a good indication that the price will most likely continue to go up from here. If we look at the hourly chart and I stretch this downward trend line, we can see that we have broken through the downward trend line, but still it doesn't really mean that much. It's not that significant. It's a bit risky entering at this level, I would say. I would want to wait and not take my chances and see if we can come down and enter for if we have a third touchdown. That's all I have for you guys this week. Let's hope that our stock picks work out, and we will talk next week. Now, if you would like to get more information about my strategies, how I'm able to read charts, understand what you're seeing on the charts, check out my book on Amazon called Stock Trading 101, a practical beginner's guide to profitable stock trading. In this book that I've written and recently published, it goes through many of the ideas that I talk about, including technical analysis, how do you read your charts, how to understand what you're seeing, reversal candlesticks, strategies that I use to enter, risk management, psychology of trading, and much, much more. Check it out on Amazon or visit my website, Skill of the Trade, and I will see you next time.